I am AI Avatar of CA Ratan Mundra. The draft income tax rules and forms 2026 mark one of the most significant transformations in India's tax compliance framework. The system is moving away from trust-based declarations to technology-led, data-validated compliance. In this master session, we will compare every major new form with its old equivalent, explain what has changed, and analyze the real-world impact on taxpayers, consultants, and compliance teams. Earlier, foreign tax credit was claimed through Form 67, which relied largely on self-declared figures. Under the new regime, Form 44 introduces granular reporting, country-wise income, tax paid, tax disputed, and tax credited. Most importantly, this data is auto-matched with the return of income and AIS. Foreign tax credit is no longer a claim. It is a system-verified entitlement. Form 45 is a completely new compliance requirement. Even if no foreign tax credit is claimed today, taxpayers must disclose ongoing or potential foreign tax disputes. This allows the tax department to track future credit risks in advance rather than after the claim is made. Non-disclosure today can directly affect FTC claims tomorrow. Earlier, Form 10F focused mainly on residency and nationality. Form 41 goes much deeper, requiring disclosure of beneficial ownership, entity type, and treaty eligibility period. This change embeds anti-treaty shopping checks directly into the form itself. Treaty eligibility is now tested at the disclosure stage, not during assessment. Tax residency certificates are no longer standalone documents. Forms 42 and 43 introduced digital validation, jurisdiction-wise standardization, and automatic linkage with treaty claims and remittance filings. TRCs now operate as part of a connected compliance ecosystem. Earlier, treaty relief claims were often isolated declarations. Form 39 now maps treaty relief article by article, linking it with withholding returns and remittance information. Treaty relief becomes fully traceable, from payment stage to final assessment. Form 3 CEB focused on reporting compliance. Form 48 converts transfer pricing into a data validation exercise, requiring transaction tagging, reconciliation with books, and segment-wise margins. Transfer pricing is no longer about explanations. It is about numbers lining up across systems. Forms 46 and 47 formally introduce alternative arm's length price determination options. While flexibility has increased, every choice must now be certified and justified. The message is clear. Discretion is allowed, but accountability is mandatory. Earlier, transfer pricing disputes were largely officer-driven. The new forms introduce structured escalation and reporting, reducing discretion and increasing predictability. Litigation itself is now part of the compliance architecture. Form 49 consolidates all safe harbor reporting into a single framework. Service categories are clearly split, and MAP exclusions must be explicitly declared. Safe harbor is no longer a shortcut. It is a strategic tax positioning decision. Advanced pricing agreements are no longer static documents. The new APA forms track the entire life cycle: application, compliance, revision, and renewal. APAs evolve into ongoing compliance commitments, not one-time approvals. Country-by-country reporting is now tightly aligned with global filings. Entity-level inconsistencies are automatically detectable. A mismatch anywhere in the group can trigger scrutiny in India. Income attribution rules are now far more structured. Non-residents must disclose how income is linked to Indian assets and activities. Clarity has improved, but tolerance has reduced. Fund structures must now demonstrate real substance. Eligibility is no longer assumed. It must be proved through disclosures. Withholding compliance is now fully interconnected. Any error rate, nature, or classification flows instantly across systems. Mistakes no longer stay local, they become system-wide alerts. IFSC benefits now operate within a rule-driven compliance framework. Eligibility is clearly defined, monitored, and validated through forms. The draft income tax forms 2026 transform tax compliance into a continuous, data-validated process. Taxpayers must invest early in systems, documentation, and internal controls to stay ahead. Moonsys and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence. A pioneer in establishing SEZ and IFSC units within GIFT City and India, delivering end-to-end IFSC setup. Operational support and handling compliances, risk management renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university BAT, and ancillary regulations, and fintech, expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA, comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.